One of the most common deductions that people claim in their tax return is for motor vehicle expenses, but it is a little bit of a confusing area because there's multiple methods to pick from. Today's video, I'm going to be going through the logbook method, the cents per kilometre method, talk to you about how each of those methods works, and let you know which one I think is best. Hello everyone, my name is Ethan Rushock, and as I said, today's video is going to be all about claiming motor vehicle expenses in your tax return here in Australia. So what I'll go through is the different methods that we've got, so the logbook method and the cents per kilometre method. And I'm going to go through details on how they work and what can be claimed, what can't be claimed, and which method is best for which situation. I'll also go through what records are required for each situation because there's a big discrepancy in the records that you need to keep under the logbook method versus the cents per kilometre method, which can help decide which method you're going to use. Now, I won't talk about it in much detail, but if you don't own the car, then you have to claim the actual costs, which is a whole different thing compared to these two methods. But today's focus is more so going to be on cars that you own, cents per kilometre, and logbook. So before we even pick a method, we first need to have an understanding of what's actually claimable and what's not claimable when it comes to car expenses. So I'll jump over here to the ATO website and I'll go through what they class as claimable work-related expenses when it comes to motor vehicle. So we've got things like performing your work duties, for example, traveling from your regular place of work to meet with a client, attending work-related conferences or meetings away from your regular place of work, delivering items or collecting supplies, travel between two separate places of employment, but not if one of the places is your home. So an example of this one here is if you're traveling between two jobs. So you go to your first job and then you travel directly to the second job. That travel between those two jobs is claimable. So another one is traveling from your regular place of work to an alternate place of work that isn't your regular place of work. So you may be located at location 1, and as a part of your job, you need to go to location 2 this day. So you travel from location 1 to location 2 and back, and again, that's going to be claimable. Now, this could also occur that if you have to travel, instead of starting at location 1, today you've got to start at location 2, that could also be claimable. Now, the big one that's not claimable in most situations is travel from home to work or from work to home. So people quite often think, yep, I use my car to get to and from work, but that's not claimable. Now, there are some situations where it is claimable. So again, I'll take you over to the ATO website here and go through that list. So they've got, if your home was the base of employment, so that is your employer requires you to work from home and then travel to a workplace to continue work. So this has been quite common that now more jobs are being based from home and then you may have to go to places from there. So you may be going out to see a client or you may be going to a workplace that's not your regular place because your regular base of employment is at home. So some of the other situations that are listed here, so we've got shifting places of employment, so you've got no fixed place of work and you continue travel from one work site to another. So that'll be where there isn't a fixed place of employment and you're constantly starting work at all different places. So that could also be something like a tradie, which would lead into the next one, which is carrying bulky tools or equipment for work, but all of the following need to apply. So the tools or equipment are essential to perform your employment duties and you don't carry them merely as a matter of choice. The tools or equipment are bulky, and also that there's no secure storage for the items at the workplace. So this is one that people typically will claim. As a tradie, they'll go, yep, I carry my tools to and from work. But the ATO have got some real strict rules here on this being able to apply. So to start with, the first one here is pretty much saying that the tools need to be mandatory. You need to actually be required to take these to work. You're not just doing that by choice. The second one is relating to the size of them. And a good way to think about it is, could you have carried these tools on public transport, or were they something that really needed to be transported in your car? So that's an easy way to think, were they bulky? And then the third one is related to, is there a secure spot to store these at work? So if you've got a locker that's locked where you could have stored these at work and you didn't need to cart them back and forward to work. There's some of the key tests that you need to pass to be able to claim travel to and from your home to workplace and claiming it because you're carrying bulky tools. I just want to interrupt for a second before I go to the logbook method. I would really appreciate anyone that's watching that's found this video at all valuable to hit that like button, hit the subscribe button, and leave a comment. These things really help me grow my channel, and I really appreciate the support. Anyway, back into the video. So now we've established what's claimable and what's not. Now we've got to work out which method works best. So I'll start with the logbook method, and as it may state in the name, the logbook method requires you to keep a logbook to be able to track your work-related percentage of your car expenses. So the logbook needs to be kept for a continuous 12-week period, and that logbook can last you up to 5 years, but it needs to be a representation of a normal 12-week period for you, And if that situation changes at all, you need to redo your logbook. So once you've done the logbook, this will allow you to work out your work-related percentage, and then you're going to claim that percentage of all your running costs and the decline in value of your car. So we're going to have things like fuel. Now, fuel can be claimed under two separate methods. So I'll show you here. It can be claimed under the actual receipts method, or it can be an estimate based on odometer records, and all other expenses will need to be claimed on actuals. So you can suddenly see the record keeping for the logbook method is quite strenuous. You need to be keeping records for all car expenses. So on top of fuel, you're going to have things like registration, motor vehicle servicing, any repairs, tires on your car, and then potentially the decline in value, so the depreciation of the car, and maybe interest on a loan for that car. So you definitely got a wide range of things here that you can claim, but with a wide range of things becomes more things that you need to keep track of. So say you've done your logbook and it turns out that in that logbook period, 80% of your kilometers were work related. So for instance, over the year, you might have done 30,000 Ks and 24,000 of them were work related. So you've gone, okay, 80% of my expenses on my car are going to be claimable. And we calculate all of our expenses and they come to $7,000. So it's just as simple as timesing that $7,000 by the work-related percentage, so in this case 80%, and we're going to get a claim here of $5,600, which, as you will see when we get into the cents per kilometer, is greater than the maximum we can claim under the cents per kilometer method. Something else to consider if you are starting to do a larger amount of percentage is if you're looking at purchasing a new car, potentially that depreciation benefits could make the logbook method more attractive. So it is just something else to keep in mind, but that's a lot more complex because then you need to consider what's going to happen when you dispose of the car, etc. So typically the logbook method is going to be best for people that are either doing a high number of work-related kilometers and also people that have got really high running costs of their vehicle. So those two things, and especially if they're combined, will make the logbook method most beneficial in those situations. So the second method is the cents per kilometer method, and this would, I'd say, be the most common method purely because it's simple and it doesn't require a lot of records, and typically it creates a better claim for you than if you use the logbook method. So the cents per kilometer method allows you to claim a maximum of 5,000 kilometers per car per year. And I really want to stress that this is a maximum. This doesn't just mean you can instantly claim 5,000 kilometers. It has to be actual kilometers you've still done. And then these 5,000 kilometers are timed out by a rate. So that current rate for the 2021 year is 72 cents per kilometer. So the maximum claim under this method for a car is going to be $3,600 for this year. That rate does change some years, so just keep an eye on that. Now, if you do get audited, you may need to provide written evidence of how you've come up with the kilometers. So this could be via diaries to show that, yes, I traveled from this spot to this date. You might have used the ATO app to keep track of that, or you may have done a logbook for the whole year to keep track of your kilometers you've done. Now, this rate incorporates all the expenses for your car. So everything we spoke about with the logbook method, that all becomes irrelevant under the cents per kilometer method because we're claiming this rate and that incorporates every single one of those things. So it includes your fuel, includes your rego, includes your repairs, includes depreciation on your car. It's all inclusive in that one rate. So the good thing with this method is that if there are joint owners of the car, both of those owners can claim this if they both have done the 5,000 kilometers of work-related expenses or however many kilometers they've done. So this method is really good for a lot of people that are doing under 5,000 kilometers in particular because the rate is pretty generous. It gives you a pretty good claim, and in most situations, if you're only doing a limited number of work-related kilometers and your percentage is quite low, this rate normally will work out better than the logbook. Again, not in all situations. Do your own research on those things to compare the methods. So that's the basics of the logbook and the cents per kilometer method. As you can see, the logbook method is a lot more detailed than the cents per kilometer method, but they both definitely have their places and situations where they work best. So under the cents per kilometer method, as I said, the maximum claim there at the moment in dollar values is $3,600, which works out to be about $70 a week. So if you're spending under this and you're doing around that 5,000 kilometers, then the logbook method isn't going to be working out best for you because the maximum you could have is 100% business use, and therefore if you're spending under that $3,600 a year on motor vehicle running costs, then that method isn't going to work out best for you. If you start to go over $70 a week in running costs of your car, then you may want to investigate, is the logbook method going to be right for me? So that will typically be when you're starting to go over the 5,000 kilometers. If you're doing 10, 15, 20,000 kilometers for the year for work-related purposes, then you definitely want to research that logbook method and see if it would work out better for you than the cents per kilometer method. the good thing is you can pick and choose which method works out best for you. So it doesn't hurt to do a logbook for a 12-week period, keep track of your expenses, see whether that method would work out better for you than the cents per kilometre method. As you can see with car expenses, a lot of it comes down to having an understanding of what's actually claimable and then picking which method. And as I said, it doesn't hurt to keep track of both methods because you can pick and choose, and you obviously want to pick the one that's going to give you the biggest deduction. I hope that video has been helpful for you. Make sure you check out some of my other tax tip videos on my channel. And again, I thank you for being here, and I'll talk to you again soon.